Hi everybody, this is Property with Leonard and welcome to another episode. Now on this channel we discuss property, finance and investments. Now please note that none of my videos constitutes as financial advice, but if you're looking for financial advice, please speak to an accredited and registered financial advisor. So in this episode I'm going to be talking about property co-ownership. Now property co-ownership, it could be the best way for you to take a step up the property ladder. And in this video, as I mentioned, I'm going to share with you and outline the benefits, the potential pitfalls and guidelines for co-owning a property, as well as touch on the recently launched collective buying home loan scheme from FNB, where up to 12 people can actually buy a property together. But in this video, this one is mainly focused on co-ownership, which is becoming increasingly common here in South Africa. This is one of those videos where you have to watch this video right to the end, because you can't afford to miss out on any of the things that I'm going to share with you today. And this video might be a little bit longer than my usual videos, but I wanted to make sure that I really share with you and give you all the information, stuff that I know, in order for you to make an informed financial decision. Now, as I mentioned, co-ownership, which is becoming increasingly common here in South Africa, and it's a great way for people to start investing in property with the intention of perhaps flipping it, selling it, or sharing the profit with your co-owner, or perhaps buying it and renting it out. The main reason why this form of property ownership is becoming so popular here in South Africa is due to the economic climate, because it can be very challenging to enter into the property market, especially as a first-time home buyer. As a result, more people are choosing to buy property with a friend or a family member or a colleague or anyone for that matter. And I know a lot of you might not be aware of it, but you can actually buy property with anyone. Like all property buyers, co-owners, they have the option of taking out a home loan on the property, of course, or paying it cash like everyone else. And seeing that this is co-ownership, shares in the property, it can be split according to each party's contribution. It's pretty straightforward, but one party may take 40% ownership and the other 60% of the single property. And such share arrangements, it can be recorded and registered on the title deeds by the deeds office. So that is an option. And it is very important to agree and stipulate the shareholdings of each owner before acquiring the property. If you haven't done that, there's no need for you to be concerned or to worry too much, because failure to stipulate the shareholdings will result in the legal presumption that the co-owners acquire the property in equal shares. In other words, a 50-50 split. I am aware that FNB, like I said, has launched a collective buying home loan scheme allowing up to 12 people to buy a property together. Now, most of what I will share in this video, the principles, etc., it will apply for a collective buying home loan scheme as well. I'm not really keen to mention companies. I mentioned it already in my videos, such as FNB, although they get an overwhelming support from people like me. They, like many other big companies, big businesses, they are not so keen in investing in us. So come on, FNB, you should do something about that. Now, this collective buying home loan scheme is almost like a Stokvels type of home loan product. And Stokvels are something that many South Africans, many of you watching, are very familiar with. And that merely capitalized on that principle, that product that they have introduced. The bank will allow as many as 12 people to come together to apply for a bond. But as I mentioned, this video is more about co-ownership. Now, with regards to co-ownership, there are risks and responsibilities involved in this. So you need to make sure that you enter into this agreement with people that you really trust and those with strong credit profiles. Now, when it comes to co-owning a property, there are, however, several factors that you should consider before signing on the dotted line. The first one is you need to prepare well. Now, simply from a financial perspective, co-owning a property with a trusted colleague or friend or partner, it makes excellent sense. And sharing the costs of co-owning a property, it also helps when it comes to when it comes to maintenance and renovations or other necessities that's attached to owning a property, and ensuring that you are financially prepared to own a home. That is absolute paramount. What you can do is go watch some of my previous videos on my channel. I'm thinking specifically about videos I've previously recorded on advice for first-time home buyers, the hidden costs of buying a property. There's quite a lot of content on this channel. I'm going to leave a link to my playlist, buying advice playlist in the description below, or you can just click on the banner on top. It should take you to one of those videos that I've just mentioned. Also important, secondly, is checking your credit score. Now, a good credit history and an excellent credit score, these things are essential when you are looking to purchase a property. This will of course apply to both of you. You both owners. If one of you have a bad credit record, it will most definitely affect your application as a whole. In case you wonder how can this affect you, well, firstly is you might not be able to get a bond, and secondly, because of a low credit scoring, you might be charged a much higher interest rate. Now, those things you really need to take into consideration. And don't forget also that you are entitled to one free credit score report per year, but as I've also discussed in previous videos, even checking your credit score can affect your credit score, if that makes sense to you. Next is, assessing your debt. Now, there's no escaping debt. Debt is part and parcel of almost everyone's financial lives. Now, ensuring that both you and your fellow co-owner can manage your debt responsibly is critical. And then also understanding your abilities, because once you've made a full assessment of your financial situation, you will have a better understanding of what kind of financial outlay you can make, and also knowing your strengths, because you need to understand how much finance you can apply for and what you can afford in terms of purchasing this property. Speak to your financial advisor and or a bond originator to calculate what you can afford. You can also use a bond affordable calculator, which you can find, one of those you can find on my property website. It is African Sun Properties, www.africansunproperties.co.za. You can see it right over there, and I'll also leave a link to my website in the description below. You can go check it out there. Another very important, if not the most important consideration for you, is choosing your co-owner well. Now, by that I mean opting to enter into a property co-ownership agreement. It is a serious decision, and choosing the right person to co-own a property with should be well considered and not an impulsive choice. When choosing your property co-owner, bear in mind that firstly, you don't have to marry them. It is entirely possible, as I alluded to earlier, to co-own a property with your best friend. Many first-time home buyers, even in my business, they make their mark in the property world through property co-ownership. And there's absolutely nothing wrong with that. Nothing wrong with that. The next point to note is that there's no separation. Now, what do I mean by that? Co-owning a property with another person means that you both own all of the property and are therefore jointly responsible for the maintenance and the upkeep of it. And of course, on a practical level, there may be a differentiation of duties attached to the property. If one of you, just to use an example, is a DIY fanatic and the other is best suited for decor, etc., you can share the workload between you. But when it comes to the financial and maintenance related obligations of co-owning a property, the bottom line is you are jointly responsible. And also take into account that you'll need to sign a contract. A property co-ownership agreement is a legally binding document. It's not just word of mouth. Drawing up an co-ownership agreement is an essential task, and one that must be undertaken with professional help. So speak to an attorney who would be able, and I would highly recommend that, to be able to assist you in this regard. And this will be an additional cost to you, of course, but trust me, it is absolutely necessary and you will save in the long run. And something else you also need to take note of is, you see people buy property for all sorts of different reasons. And it's important that you and your fellow co-owner, that you share a common purpose. And my advice to you is, seeing that you are going to buy this property together, you are going to be co-owners, you are going to be individually and jointly responsible for everything regarding this property, you need to put your cards all on the table. You need to make sure that you are on the same page here. Very importantly, the terms and conditions set out and agreed upon in your property co-ownership agreement, I want to go slow here, should cover almost any eventuality in terms of your co-owned property. And if you don't do this, you are going to cry very long crocodile tears. Now in Afrikaans sê hulle, jy gaan krokodiltrane huil. And that is, if you don't keep things professional, Keep it professional. And this is also key and serves to cement and support your relationship with the co-owner. And just to prove to you the importance of such contracts, as I alluded to earlier. Now, a joint property ownership contract should help you answer the following types of questions. Questions like, firstly, what happens if one of you needs to or want to sell their share in the co-owned property? Or exactly how much are you each responsible for as property co-owners in terms of your finances? Thirdly, how do you make decisions around the property that you purchase together? And fourthly, what happens if there's a dispute or disagreement between the two of you as the co-owners of this property? This one I would really want to stand still a little bit, because your agreement, your co-ownership agreement should actually stipulate if there's an irreconcilable differences between you, a disagreement that you can't fix between the two of you. Is litigation the first option or mediation? Now, it's always advisable, and I'm saying this in my capacity as a professional mediator as well, that you clearly stipulate that your first order of business is mediation and not litigation. Because perhaps your co-owner, the other party to this agreement, perhaps he or she is in a better financial position and would be able to afford litigation, but you can't. And mediation is much cheaper and it's less stress. And many a times these issues get sorted out by means of mediation. So you need to, that's also a very, very important point to take into consideration. What is the purpose of buying this property together? You need to discuss this. If it's to renovate and sell it, how will the profit be shared between you? How will it be calculated? It's important that those things are in writing. You need to discuss this. It's uncomfortable topics, but this needs to be discussed. What happens if one of you dies? Next is, who will take responsibility for particular practical aspects of maintaining the property? So in conclusion, what you need to understand is that the process of property co-ownership does not end. It doesn't end when you've made a successful property purchase. Definitely not. Once you've made your property dreams come true together, you'll need to maintain the relationship. Ensure that you both of you adhere to the co-ownership agreement and take care of your property investment. Take care of it together. Don't rush your decision making. Don't. And make sure that you're ready to own a property together, both of you. Property investment, it is a long-term decision and a long-term investment. Make sure that you both understand that. And whatever else I've shared with you today, like I mentioned earlier, this is one of those videos that I really hope, and I'm glad that you are still here. Perhaps you need to rewind, we're not in that era anymore. I'm thinking about cassette players. You have to maybe watch it all over again or skip to certain sections of this video just to make sure that you completely and fully understand the impact of this co-ownership property. And I'm sharing this with you because I really want to help you. This is a great way to own and start your property, start investing in property, start building that property portfolio. But make sure that you do your homework. Don't be too hasty. Make sure that you make calculated decisions. Thank you so much, everybody. It was a mouthful. I felt even tired now, feeling tired now. Thank you so much for once again joining me on today's episode. Now, if this episode was of value to you, can I kindly ask you, if you haven't, to please subscribe to my channel, to like this video, and to share it, and leave me a comment in the comment section below. It's really good for you to leave comments in the comment section, and to like and to share, and of course to subscribe, because those things that are good for the YouTube algorithms, and that way we will grow and we will be able to reach more people who you and I know can benefit from the contents of these videos. And just before I go, thank you so much, everybody. We're almost at 1,000 subscribers. I never really thought that you would enjoy my content so much. Thank you so, even a tongue twister. That's how excited I am about that. Thank you so much for watching my videos. I've noticed that many of you watching my videos, you watch it for almost 60%. You watch it for quite a long time, 60 to 80% of the duration of the video. And I really, really appreciate that. And I'm so happy and glad that I can really add value to you, and specifically in South Africa. Land is a sensitive issue, and I hope that whenever you watch my videos, the information that I shared will help you to acquire property. Thank you so much. And yeah, two things. When you subscribe, Firstly, it is free. Secondly, really easy. Just click that subscribe button in the bottom right-hand corner of your screen. Thank you so much, everybody. I see you in the next episode. Stay blessed.